Welcome back, everyone. What a great conference we've had. We are halfway through, lots more companies to come. Let's introduce our next. We have Cyngn. It trades on the NASDAQ under the symbol CYN and develops and deploys scalable, differentiated autonomous vehicle technology for industrial organizations. Cyngn's self-driving solutions allow existing workforces to increase productivity and efficiency. The company addresses significant challenges facing industrial organizations today, such as labor shortages, costly safety incidents, and increased consumer demand for e-commerce. Please welcome its CEO, Lior Tal. Welcome, Lior.
Hi, and thank you for having us here today.
All right, we look forward to hearing your presentation.
Okay, before we start, I want to refer everyone to our safe harbor statement. You can learn more about risk factors through our filings with the SEC. A little bit about the company. Cyngn is an autonomous driving technology company. Our focus is on the industrial and commercial use cases. We've been operating since 2013, regionally out of the Silicon Valley in Menlo Park, California. The company was funded by some of the most significant venture capital firms out there, including Andreessen Horowitz and Benchmark Capital, who are still some of our larger shareholders. After years of research and development, as we're getting ready to start commercializing our technology, we took the company public through an IPO on NASDAQ in October of 21 and are currently traded under the symbol CYN. Some of the things that I will be covering today, of course, is the very significant market opportunity for industrial automation, traditionally starting from the potential cost of saving due to the cost of labor that these enterprises incur today. And in the past couple of years, coupled also with very significant labor shortage, disruption to supply chain, and really missed opportunities for higher productivity and higher gains. Cyngn is very uniquely positioned to take advantage of this market opportunity because of our solutions, especially EAS, the Enterprise Autonomy Suite, which is our flagship product. It is an in-house developed full-stack self-driving solution. It can be applied to almost any industrial vehicle. We've already tried it on over 15 different vehicles, from shuttle buses, electric trucks, to smaller material handling vehicles. We have about 30 patent applications across the technology in different stages of development. And some of the milestones I will be covering today is a very exciting contract we signed recently with US Continental to deploy our vehicles at their California-based operation early next year. A multi-phase contract with a multi-billion-dollar global building material manufacturer, where they would have us convert their forklifts into autonomous solutions. They have dozens of facilities. They have thousands of these vehicles they're trying to solve for. And our contract with the US-based contract manufacturer that allows us to integrate to existing fleets or take out new stock chasers to customers in the next year in the order of hundreds of vehicles per year. It really all starts with understanding how significant the footprint of industrial vehicles is. There are millions of these vehicles anywhere you look, from warehouses to manufacturing facilities, seaports, airports, mining, construction sites. These vehicles are really the backbone of most industries, and they can carry weights and move at speeds that people just cannot. So they're absolutely critical to the ability to move everything around us in the world. The challenge is, in order for these enterprises to use the vehicles, they need human operators. And these are people that need to be trained on these vehicles. Sometimes the conditions where they work are harsh, they're remote. They operate usually at 2, sometimes even 3 shifts. So you're looking at 2 or 3 people per vehicle. And up to this point, there was not really a great solution on how to reduce the dependence on these people. And the significance of the dependence on that workforce, like I said, traditionally is considered to be a very significant source of cost to organizations. If you're just looking at the shipments of material handling vehicles in 2019, the cost to drive them on an annual basis is the order of $140 billion. You couple the cost to organization from disruption and loss to life and property because of accidents that arise from human error. And those are, over $170 billion per year as well. So these are very, very significant cost factors to these organizations. But I think the point that really, really brings it home, and that's especially heightened in the last couple of years, is the missed opportunity for productivity and gains to these organizations, because they just can't fill up these jobs. People just don't want to work. These are difficult jobs. They're demanding. Training takes time. Churn is very significant. And it's estimated that by 2030, the missed opportunity, the damage to the U.S. economy adds up to $1 trillion out of that factor, which is a very significant potential for gains for technological solutions. Now, automation is really that silver bullet. It's a perfect solution to these problems, because if you really think about what happens when you replace a human operator, a human driver, with that perfect driving solution, safety stops being a consideration. Our vehicles, they don't play with their phones, they're not distracted, they're never emotional, they just come into work day in, day out. As long as there is battery in that machine, they can work around the clock. The problem with fluctuations in supply go away. There's no need for working on averages of workforces. You can dial the licenses up during the holiday season and then dial them down again when the demand goes down. At the end of the day, you see companies like Amazon, like Foxconn, like Siemens, really identifying the value of harnessing automation for their workflows. These companies have been doing it for the last 10 years. And really, they benefit from cost structures, margin, and flexibility that their competitors just, they can't cope with that. And this is where Cyngn comes in. We have the ability to give these companies across the different industries, whether it's manufacturing, logistics, and all the way to heavy industry, the superpowers that are reserved to technology companies like Amazon. And the way we're able to do that is a breakthrough we had a few years ago when we started working on the technology in identifying the potential in harnessing technology, supply chain, and talent from the open road autonomy, from robotaxis, from highway passenger vehicles, from long haul trucking, and deploying them into these industrial applications. You can think really about developing a brain that can drive an SUV on the road at 60 miles per hour, and then putting it to work inside a facility to move material. This also takes advantage of the cost reduction in supply chain of sensors, computing, communication, and of course the innovations and the breakthroughs that are happening by the great people that are funded by the hundreds of billions of dollars that go into open road autonomy. The way we're taking our solution into market is by collaborating with the vehicle manufacturers, companies like BYD and Greenland Technologies under the Heavy brand that build forklifts, companies like Columbia with material handling vehicles, including stock chasers and payloaders, and other technology companies. We bring the software and the data services. We integrate and couple it with these best of breed vehicles and technology solutions, and together we can offer the customer something that they cannot get with other competitors, which is the vehicle of their choice with the service network, with the financing opportunity these companies bring, and the best of breed software that comes from Cyngn. Our ability to do that comes from our flagship product from EAS, our Enterprise Autonomy Suite. It's really comprised out of three components. The first one is Drive Mode. Drive Mode replaces the driver. That is the software that sits on top of the computer, communication, and different sensors, and is really able to drive almost in any condition. We've been developing it on the open roads in California, deploying it anywhere from container ports, corporate campuses, to indoors. We've tried it on many different vehicles so far. It is an always evolving system using the Cyngn Evolve infrastructure, which is a data pipeline, allows us, very similar to how Tesla does it, collect data from all our vehicles in the field, analyze the performance of our solutions in nature as they're deployed in commercial deployments, improve, identify enhancements opportunities, make them, and then run very large simulations overnight, make sure that everything is working as intended. And then with a press of the button, we can push it all down to the fleet, to any select or all customers. And next time they come up to work, these vehicles know new things, work better, and can do things they couldn't do before. The customer really interacts with what we call the Cyngn Insight. Cyngn Insight is a fleet management and analytics interface. This is where they see where the vehicles are across their operation. They can task them. They can take control over them using remote control teleoperation. They can derive very actionable insights about the workflows and the facilities and really make it agnostic to them. What is the technology that drives the vehicle? This is something that really targeted the productivity aspect, doesn't require very skilled people to operate it. You can, if you were a forklift operator before, you can be trained to now support 30 forklifts using Cyngn Insight. The way we commercialize EAS is on a subscription or license base. This is per vehicle, usually on an annual basis. And the pricing is really a function of the utility of the vehicle. And it varies. Some vehicle, like the stock chasers, would benefit from very high volumes. There are many, many of these vehicles, whereas in a project or deployment with heavy industry, with mining trucks or heavy industry vehicles, it can be maybe lower volume, but higher unit economics, higher utility of that vehicle. And if you really go back to the numbers we talked about, there are millions of these vehicles already deployed out there as a working footprint. And there are hundreds of thousands, up to 1 million sold each year and deployed into these operations. So this presents a very significant revenue opportunity over time. Now, I really like a quote that Jensen, NVIDIA CEO, shared in one of their annual meetings, where everything that moves will become autonomous. And I absolutely believe that, because it's such a natural evolution of these moving vehicles to take advantage of innovation in computers, artificial intelligence, and sensing, and over time reduce the dependence on people. When we decided to start our commercialization path is with material handling. It's a combination of opportunity and complexity, and by itself represents an over $119 billion revenue per year, which is, again, a function of the cost of labor it takes today to operate these vehicles. And if you assume that the autonomous solution drives at parity with the human operator, then that cost parity doesn't bring into account the benefits from safety and increased productivity, and therefore even from the same cost, an enterprise would benefit from an upgrade to automation. And when you think about this in comparison to what we're hearing with the open road autonomy from the Tesla, GM to the trucking companies, everything is simpler in the industrial world. Everything is slower. The environments are more structured. People are more disciplined. Regulatory space is much more easy. You don't have the open roads. You don't have children jumping, running, behind a soccer ball. The long tail of events that the system is expected to encounter is much, much shorter and simpler. And it just makes much more sense to start with these applications. And again, remembering that these are billions and hundreds of billions of value in applications. If you look across warehouses and manufacturing, all the way out to seaports and airports and out to mining and construction, each of these really represents a very significant opportunity, but each of them is really a sandbox compared to what is happening on the open road, and will be scaled and will be used much, much faster than anything on passenger autonomy. Now, our technology can already go all the way out to the open road. We've been developing it, like I said, with SUVs in the streets in California to make sure that when it's actually deployed down into industrial applications, it is done above and beyond what is needed from that application. So when we start commercializing, we look at the lower hanging fruits like material handling and indoors. But over time, we can make a decision. When do we want to move up to additional applications, support additional vehicles, take on more complicated and potentially more valuable deployments? Today, our technology already supports, like I said, applications that are relevant to heavy industry, like forklifts and some of the mining applications. But we're really disciplined in the sense that we want to take that first material handling application across the line to scale commercial deployment and be a foundation for funding the company before we take on additional research and development initiative. There's a few that we're taking on that are paid initiatives, but by large, 80% of the company is really working on commercializing stock chasers and similar vehicles into the material handling commercial world. So the way the go-to-market evolves over time is really in the principle of land and expand. The first vehicle in the first site, which was the plan for 2022, is really to take one application through the entire sales cycle deployment and support. So taking everything that is necessary to make a sale into a customer, understand their needs, have them understand the value of the solution, deploy the vehicle, either it's a new stock chaser or retrofitted with our technology, and then deploy the vehicle, train the customer, hand them over the solution, and support them over time. And then beyond that, start taking larger deployments, start taking more sites from existing customers and new ones, and over time, add additional vehicles to support a heterogeneous fleet. Each additional vehicle that is added into that environment is at a very, very low marginal cost and very simple integration into the customer operation. And over time, it also creates a moat from in the sense of the data that these vehicles have access to and the ease of operation and the low cost of integration. It makes it very difficult to replace any one of these solutions because as a whole, we can support the entire fleet using a single solution, EAS. What's actually happened this year is, being aware of what's happening out there in the macroeconomic and the pressure everyone is having. And in an attempt to accelerate our path to revenues, which was only expected to arrive in 23 and scaling up in 24, is we've actually doubled down on the plan. We've already deployed to 3, which is more than the one we intended, our stock chasers into both manufacturing and 3PL, third-party logistic facilities in the US. We've announced a deployment into a commercial customer early next year with US Continental. And we've also started taking on a second application, the forklift, which is a very exciting, it's probably the most valuable material handling vehicle out there. And that's a result of very successful recruiting, especially of technical and engineering talent. This year, these are people, like I said, many of them came from the Amazon, the Tesla, people that have been working on very advanced open road autonomy, but just don't see when these things are going to hit commercial production and want to see the impact of the work getting into the hands of customers. And this is, part of Cyngn's appeal. It's working with a very strong team, but also really seeing the impact of the work you're doing at the customer side and seeing the benefit that it delivers to those customers. A few of the recent milestones we've announced, and there's links here to the PRs. I also encourage people to find our blog on the website. There's a lot of videos, examples, interviews there with customers and team members that really makes it very easy to understand the potential of autonomy in the industrial world and the impact that our solution is making there. So just go visit our website, cyngn.com. Earlier this year, we launched EAS 8.0, which packs a lot of new features. It's really the first significant upgrade from previous years in moving from focusing on the self-driving technology to really making it an enterprise turnkey solution that allows a customer to harness the technology into their business operation. It is really focuses on interfaces, ease of usability, the analytics, and a lot of the things that really take some of these organizations into the next generation. We've launched Drive Mode Kit, which is a turnkey bolt-on solution to take an existing stock chaser and overnight convert it into an autonomous solution. You can use it for a new off-the-line vehicle. We've been working with Colombia. You can install it as these vehicles leave the line, or you can get the vehicles out of the customer site and using a third-party manufacturer and support partner we have, you can retrofit them, which is a very unique and competitive advantage that Cyngn had for companies that already invested in large fleets and would like to use them for their operations. On the commercial side, I've already mentioned a contract with US Continental. They'll be deploying our autonomous stock chasers out of their California manufacturing facility. We will be doing it by harnessing a relationship we have with a Wisconsin-based contract manufacturing company that can take out hundreds of these stock chasers, either new or using a retrofit of the Drive Mode Kit. And that really allows us in 23 and onward to scale our operation as we see more demand coming from customers. And a very exciting contract we have with a multi-billion-dollar global building material manufacturer that has very specific needs for thousands of forklifts across dozens of facilities that, because of their uniqueness, the size of the load they're carrying and some of the, let's say, more exotic requirements they have, can't use off-the-shelf automation solutions. They needed something that has the flexibility that Cyngn brings in the ability to support their existing facility and support the vehicles of their choice. I suggested you visit the blog. One of the interesting things there is a white paper that we published after a deployment with a company called Global Logistics and Fulfillment. They're a 3PL operator out of Nevada and California. And one of the interesting things about these companies is they're seeing a surge in demand for their solution because of the increase in demand for e-commerce. And these are companies that they have a fixed cost on real estate. And when there's an increase in demand for their services, their only way to fulfill it is really by increasing the workforce, working more hours, hiring more people. And the problem with retaining these people with labor shortage really caps their ability to take advantage of the increasing demand. Automation solves that problem. And by deploying just a handful of vehicles with GLF, we've demonstrated a 64 reduction in the cost of labor and a 33 increase in the efficiency. And again, this is just with a couple of vehicles in their operation. So it's a great example on how the technology immediately solve very identifiable and a very large scale problem these organizations have. I touched all of these items earlier, but really putting them together, our main competitive advantage is our ability to pretty much work on any vehicle in the industrial space. We can work with vehicles that customers have. We can work on new vehicles through collaboration with the OEMs like we have with BYD, Heavy, and Columbia. It can be deployed in a very wide variety of vehicles, which means that we can support heterogeneous fleets. If before the customer needed to work with 3-4 vendors for the operation inside one warehouse, they can work with Cyngn alone. The integration is one, the training is one, and our vehicles benefit from the ability to communicate with each other, make everything simpler, make everything safer. We're doing it by taking advantage of the robotaxi technology and supply chain. Our driving is more agile, it's faster, and has a much higher ceiling than the traditional automation solutions. Our ability to update it overnight and, like I said, similar to Tesla, be able to identify opportunities for enhancements or issues with the vehicles, simulate them, and push it back to the fleet overnight really makes the solution future-proof as the evolving needs of these customers change over time. And our ability to work with the OEMs, make it very friendly for them. These are companies that usually are fighting over a relatively commoditized product, and now they have a very differentiating opportunity to come to their customers or their competitors' customers and offer autonomy in addition to their baseline products. A few takeaways before we wrap it up. We have an amazing team. We have a team of people that have built companies, scale technology companies for many years. We're very proud of our partnerships. We think these partnerships really allow us to remain a software as a service company and operate as a software and data company, which in our opinion is really the thing that is missing from that industry. Our technology is differentiated and is much more advanced than the traditional industrial automation solutions out there. And the market opportunity is very significant, and it is accelerated by the disruption to supply chain, by labor shortage, and by the identification that companies like Amazon are really able to compete in a way that other companies cannot by harnessing these technologies. That is it. We'll be sharing this presentation. There's a few interesting slides in the appendix, a deeper dive into the technology, conversations about the ESG impact of autonomy and electrification, and some tidbits from our history about the previous deployment. So I invite you to look at it and, of course, be in touch with us if you have any further questions.
Great job, Lior. Okay, let's get into some questions. We got a few minutes. So there are a fair number of companies in the robotics automation space today with several relatively new public market entrants, including Cyngn. So what is it about Cyngn's focus, your model, your technology, that makes it the most likely to be the first AV technology company to actually scale its business and get to commercialization stage?
It's a great question because I I happened to had a conversation with a very senior Gartner analyst a couple of weeks ago that's been covering industrial automation for maybe 20 years. And he said something very interesting. What they found is that there's very, very low penetration of automation in the industrial world. So there's a lot of space between competitors. And for many years, there's going to be very big opportunities long before there's any need for consolidation. But what they found is that companies that have deployed a robotic solution are 92% likely to go look for a better one or a different one or additional ones. So the way we look at competition inside the industrial space is it's actually very, very helpful. It educates customers about the potential. And really, we get a lot of inbound from people that have taken the first steps into automation and started harnessing AI and some of these technologies. In comparison, like I said, to the open road applications, the industrial uses of autonomy are going to be deployed and scaled years before we're going to see vehicles or trucks on the highway driving themselves. And it's a function, like I said, of the complexity and other factors out there. And specifically between Cyngn and some of the other companies in the industrial space, we are very flexible. We can work on the vehicles that the customer chooses. Our driving is very advanced because it's been developed like a robotaxi on the open roads. So it doesn't have the ceiling that you need to compromise. Do I want to work with an automation solution, or do I want to have the driving capability of people? We can drive at parity with what the human operators are. So I think we're very well positioned. I think the focus on the industrial space is perfect timing with everything we've been seeing in the last 2 years. And we're very heads down focused on executing and delivering on that promise.
Now, what are the things that investors should be looking for over the course of the next 3 to 6 months to gauge how you're tracking against your growth plans?
When we took the company to an IPO, one of the things we told the investors at the end of 21 is that 2022 and 2023 is really the years where we start taking the technology, putting it into the hands of customer. 22 at smaller scale, 23 at larger scale, and then 24 is when we expect meaningful revenues, recurring revenues, and scale deployments to really start kicking in. As I said before, we actually accelerated the time frame, so 22 is already taking on some of the work we expected to only come in 23 and 24. So the things to really pay attention to is announcements on some of these pilots we've been taking and conversion to paying customers. Look at scaling up some of these deployments to more vehicles, more locations, and really the commercial traction we're making on the path to our plan to scale revenues in 24. We're expecting nominal revenues even at the end of this year and throughout 23. Growing them as a result of licenses like the US Continental, but also projects like the manufacturing equipment company.
Great. Now, your timeline has you reaching commercialization stage in 1 year's time, correct? So what sort of revenue generation do you anticipate over the course of this year? And what will this look like when we reach 2024?
So unfortunately, we haven't disclosed the revenue guidelines yet. And we will be looking at over the next few quarters as we make traction with our commercial deployments. But we're well funded. We raised about 24 million during the IPO. We raised another 18 at a pipe priced at the market earlier this year in April. We are relatively conservative with our growth and costs. So we are working the plan, and stay tuned for news.
Great. Jack McArdle says he's really pleased to see your progress over the past 3 months in closing your first few contracts in diverse industries and throughout the supply chain. Now, the cost savings of human labor of over 60% is an incredible selling point in this tight labor market. However, he's wondering if you've explored a DoD logistics contract or partnership, which would have an incredible advantage of being immune to macroeconomic forces and also giving you significant leverage to ramp up into 2023 and 24 without having to raise funds in a tight market. Can you comment on that?
It's a great idea, and we really like customers that are recession immune, customers that really have the ability to bridge through these more tumultuous times. And we're looking at some of these alternatives. The challenge with DoD, military, and government projects is just the sales cycle is very long and very slow. So what we're trying to balance is, the significance of potential revenue streams and their size, but also their timing. So these are things that I'm confident that we will be looking at. The question is only when does it make sense to do so.
Kat Robbins wants you to talk about the monthly maintenance fees you'll receive from the customers. Discuss the savings versus having the expense of an employee to do the same job.
Let's separate the maintenance of that solution between the hardware and the software. So the hardware, these vehicles have been operating at the customer facilities. They will continue operating. There are very established service networks by these OEMs and other companies to service the physical aspects of the solution, whether it's the vehicle itself or even the technology. For example, we can train our contract manufacturer to replace sensors or computers if needed. So that part is very leveraged, and it's part of the way that work is being done today with human operators. But once you replace the driver with software, then software maintenance is really much more in the SaaS world, software as a service. It's similar to how LinkedIn would support their customers. It's much more leverage. It's remote. It's something that you can do, without needing to be close to the customer. So, we see our SaaS aspect of the solution as being very leveraged and very scalable, and taking advantage of the fact that there's already a service solution for all these vehicles today as they're deployed.
Now, Kim Saunders says you mentioned a few different types of autonomous driving examples. So where do you think you will plant your feet first? On the roads, in warehouses, and where is your strongest growth right now?
So if you remember the slide that talks about the difference between the industrial world and passenger vehicle autonomy, we like large facilities, large warehouses. We like areas that are private facilities and not open roads. They're simpler, they're more structured, they're less regulated, and they have a commercial entity that owns and supervises those. This is why we chose to work on the stock chasers. It's a very ubiquitous vehicle. It's used pretty much across all manufacturing and logistics organizations out there. And we would like to take this one across the line to a commercial scale before we move to anything more complicated. The only caveat to that is what I said about forklifts, which was a later target for us, but because of the opportunity, the demand, and the aspiration to reach revenues faster, we decided to take it on. Usually, stock chasers and forklifts work in tandem. A stock chaser would move things around, and a forklift would put things on the stock chaser and move them out. So it's very synergetic, and our ability to support these heterogeneous fleet really puts a competitive advantage.
Well, great technology, fabulous presentation. Please come back, give us some updates. This is a thrilling industry you're in.
Thank you very much.
All right. Thank you, Lior. All right, everyone, stay with us. We'll be right back with our next presenter.